Awesome. I think we are live. I'm just trying to make sure if this is actually working on the YouTube live stream as well. It's always a challenge. I'm gonna ask our. Okay, perfect. Yeah, it's working. Okay, that's good. So it's live. All right, welcome. Hey, Martin. Really nice to have you. And I don't know even where to start because there's so much we always meet up and talk about. But for the audience to begin with, a very little brief history. So I really like Martin as a person, and when it comes to his background, so he spent his time as a global corporate banker at JPMorgan to begin with. We can go deeper before that, and then he moved into. So I call it the buy side, right? Then the investment side, and then you moved on towards founding Tion with Christoph, and then having a successful exit. And that was not enough for you, and then you decided to get back into the CEO role and of a high growth battery storage company called W Power Storage, which is where you are right now. I think that itself, these three roles carry a lot of experience, and on both sides. So welcome to the podcast, first of all, and super happy to have you not just here but also as part of the company as a key advisor. And maybe we kick off as maybe a few words on yourself. Maybe you can add a little bit of more color as to your background in general, and then we kick off into maybe a little bit of your history.
Yeah, sure. I mean, half of my life was already portrayed by you with JPMorgan, Tion, and now W Power Storage. Before that, I studied economics, did a PhD, and that was also a bit the way why I started in banking, because I always enjoyed markets, financial markets, and I always felt like that it, on the one hand, fits my interest, and on the other hand, my desire to work in a competitive environment, because before I studied, and also partly in parallel to my studies, I was a competitive athlete. So I was quite successful wrestler back in the days, and that's also why I used to enjoy competition and still do, and that describes a bit my journey. So I mean, of course, I mean, economics is a lot about competition, but in a different way. It's about competitive markets. And when I decided not to pursue an academic career after my PhD, I wanted to start in an environment which is highly competitive and where the workload is always on the higher end rather than on the relaxed end. And that brought me into banking. But after a couple of years, even though JP Morgan is an amazing employer, to be honest, I realized that even though I had no clear understanding of what it means to be more exposed to entrepreneurial challenges, I had the idea that it's more fun than working in a bank a whole lifetime. And Christoph back then was more or less sitting next to me. And I was looking around into opportunities. But he was more looking for a challenge within renewables, and I was more looking for a challenge per se. And then I found that opportunity in Munich to co-found. Back in the days, what we called YieldCo, later became an IPP. I will elaborate on that abbreviations
Sure.
in a second. Told him, hey, there's an amazing co-founding opportunity in the renewable space. Why not doing it together? And that's how it all got started. And conceptually inspired back then, we were by the business model of a so-called YieldCo, which is a super lean investment vehicle, which essentially acquires renewable energy assets. It distributes the profits. We have later on realized that pursuing an IPP type of challenge, which means independent power producer or IPP type of company, is the better way to go. Have a bit broadened the horizon of the company in terms of value chain coverage, and also depth and breadth of knowledge, and became a more what I would say, a bit old school IPP. And then, of course, the idea was to transition into that, what is often described as next gen IPP, where it's a lot about managing electricity and not acquiring only wind and solar projects. So that was, let's say, the journey until Tion, which I have left end of last year. Just for the reason that the environment has changed to the better in terms of professionalism, capital provision, and everything. But it also became a little bit less entrepreneurial. And I decided I'm still in a phase of my life where I enjoy that entrepreneurial chaos associated with the opportunity to build something better and faster than others. And then I decided to assume the responsibility of becoming CEO with W Power Storage, which is, I would say, a scale up backed by a financial investor in the battery storage system space. So it's very similar to the previous challenge. So you have an amazing team, amazing level of motivation. Then first time capital isn't scarce anymore. How to scale most efficiently and how to scale as fast as possible. And that's actually an environment I enjoy pretty much, where it's not, building from scratch like you did, where you have a long lead time of ideation, but rather in the infra space. I think that anyway, infra space doesn't require the same amount of creativity than what you do, but having a clear target and then go and scale. So that's where I do have, or where I believe I can make the most, or the most meaningful contribution, and what I also personally enjoy most. So that's a bit in a nutshell, from university to where I am today.
No, absolutely. I mean, there's so many questions I was getting while you were saying it, but I didn't want to interrupt. But to begin with, it sounds like a really, of course, I've heard this from Christoph as well, and you mentioned this before. It's one of those classic stories, right? And when you imagine that you're sitting at a, company doing multi-trillion-dollar worth of transactions every day, and then you guys are like, hey, let's do something different, classic story. But that's good. That's how most of the good journeys start. That's interesting. But then what I'm thinking is, what made you, okay, you're looking for a challenge, right? That makes sense. But then choosing a hardware business to co-found is, even if you started as a deal flow, right, and then you deal go, and then you wanted to switch that. What convinced you to not start a software company? Because I always say, just one point, that people think that, yeah, of course, building a company is an extremely difficult thing, and software company is extremely hard. But then wait until you try to start a hardware company. It's a beast of its own. So was it like the direct challenge, like no worries, or was it more conscious that, yeah, I want to do hardware?
It was pretty conscious in a way that I was convinced that my skill set fits pretty well in the infra space.
Wow.
So you can distinguish hardware and software, but I think infrastructure is a business model per se. So whenever it's infrastructure, it's a bit same but different. And given my background in economics, being a trained banker, I was quite convinced that infrastructure is quite a fit. And I also like it because it's a good mix of financial modeling, but it's also, you also have the M&A component in it, that you need to acquire projects in order to grow. But there's also the possibility of being, and that's where we are at W Power Storage today, vertically almost fully integrated, where you essentially build a machine which ideally develops, builds, and operates battery energy storage systems more efficiently than anyone else. So it's a lot about bit of finance, and it's half finance, half organization. So in the end, when you think about capital allocation and resource allocation, those are the two, I would say, main ingredients in infra. And capital allocation was a bit where I'm coming from, and resource allocation is something I do like. So from a more chaotic environment, getting things better organized, better structured, industrializing processes. That's actually an exercise I do enjoy, and both together, I felt, that's where I can deploy my skills most efficiently in a way which I enjoy. So it's not only about deploying my skills, but also having fun at work.
Got it. No, makes sense. That's powerful, right? I mean, so once you realize that things are getting a little bit more bureaucratic and it's not that challenging anymore at Tion, and then I think you took a little bit of a break, and then you joined W Power Storage. And in my opinion, I think battery storage as an asset class is a great place.
Mhm.
It's a great opportunity right now, especially in Europe, given the kind of energy crisis we are in general in the whole world. What is it? How would you rate battery storage in terms of importance to the energy infrastructure of Germany as well as Europe at the wide level?
Mhm. Mhm. I mean, it differs from country to country, but in general, when there is a build out of renewable energy, whose energy generation is always intermittent, um, the most integrating factor is storage, I mean short-term storage. So that is a piece of the puzzle we do need, and the more renewables you have, the more meaningful, or the higher the marginal value of battery storage system becomes. And I think in Germany we are at that point where it's extremely valuable for, I mean, for the grid, but one could also say for society, because it helps to kind of balance the intermittent energy generation of renewable energies. But it depends a bit on the grid. It depends on the build out of renewable energies, and also whether the build out is going to continue. But in Germany, it's kind of the perfect situation for BESS, because the build out is quite advanced, but has not yet come to an end, in order to facilitate the further build out of renewables, and also to integrate what already has been built structurally into the grid and into the system. BESS is super helpful, but, and that's super important to say, it's super helpful if it's managed in a way that it facilitates the integration of renewables. And you can also build a battery connected to the grid and do whatever you want. So it's not a given that a storage facility adds value to the grid and to the energy system. But if it's operated in a way that it does, it's a very meaningful piece of the puzzle we need in order to reach our net zero targets.
God, it makes sense. And I think very few people realize how important battery storage is and the impact it can have when you have demand surges. And for grid balancing, and but we won't go into that. But one question that comes to my mind is, you mentioned you don't necessarily need the same level of creativity when you're building a hardware company, because you kind of know, okay, this is what you have to build. And maybe that's a very generic statement, but like in the case of battery storage, when you know what the outcome is, right, and when you know that you cannot have, because you're not in the business of making a cell structure which suddenly stores 2x the amount of it has 2x storage capacity for the same size or for the same value, something like this. So my question is, how do you differentiate compared to other BESS companies? Because is it just about scale? Is it just about
I see where you're coming from. So you differentiate less in the very early days around ideation.
Yeah.
Because in the end, infrastructure is always infrastructure, but there are certainly a million of levers where you can do better than others.
Right.
So if you think about the life cycle of a battery storage system, it starts with securing land, securing building permits, getting grid. That already makes a hell of a difference, how good your project will be in the very end. So of course, at some point, one could say, okay, it's always the same technology from China, which is manufactured and built and then shipped over here and constructed. But the quality of the site already determines the quality of the product, and site means, of course, size, and to be honest, costs, grid connection, then the way you can connect your system to the grid, whether it's associated with a million of restrictions or not. Then also distance to the next entry point makes an economic difference. Whether you have, how fast you can obtain a building permit, and whether you have planned from day one in a way which you are going to build later on, or whether your planning is shit and then you have to come back, say, hey, look, the whole thing looks totally different, which again takes you a lot of time to get the product to get the project to the point where construction can start. During construction, you can do a million of mistakes, because it's actually a mix of, it's one technology is the system, or the battery energy storage system per se, but you also have to connect it to the grid with an inverter. So there are a million of mistakes, and mistakes mean delay, cost overruns. So it doesn't mean that, or it's not necessarily the case that only because you can start construction, because building permit, grid, land, everything is secured and in place, you can economically still fuck it up. And then when it comes to operations, same. It's not that infrastructure is always said to be low maintenance, and it's of course lower maintenance than other businesses, but still you need to have your business under control, and your business is actually operating the systems. So you need to understand deviations, you need to understand outages, you need to have a super fast response time when something happens. So there are many levers where you can differentiate. And I think in the end, it's about, of course, better resource allocation, because normally when you are vertically integrated, you have a million of projects you look into to focus on those, or to prioritize those which really have a high probability of success, and not only success in terms of getting it done, but also being economically viable. So that's important. And then during the life cycle I described, having well-defined processes, having a team which adheres on the one hand to the processes, but can also solve problems on their own without having it written down in the process. And that's essentially what resource allocation, where you can, from a resource allocation perspective, can make a difference, is just having the better team. That also makes a hell of a difference in infrastructure. Having someone, let's say, at the very beginning of the life cycle, when it's about securing the land, having a better dialogue with landowners, when it's about negotiating the conditions under which you can charge and discharge from the grid, having someone who is able to have an educated dialogue with the grid operators. Then when there will be someone orchestrating the construction, having him or her being able to negotiate it well with a certain set of suppliers, being tough when it's about the price, but still being a good partner when it comes about kind of getting the services and having them going the extra mile. So there are a million of levers. So it's not that only because in the end the product looks very similar, which is having some containers on the ground with some battery technology in there. The way how profitable the company is and how fast it grows is determined by a lot of things.
Good. Well, so I think this is a good segue into 2 points. So one is team, right? So you mentioned the kind of people that you have on board always makes a lot of difference. Again, sounds more generic, but I think it's underappreciated in this case. And the second thing is, when you mentioned that you have so many levers, I know from my own experience, this makes financing very challenging, right? Because if you're raising a certain amount of capital, any of these levers could go wrong. You have to factor in for so many things at the same time, and then your financial projections then are like, okay, well, what about scenario A, B, and C? There's a regulatory change that's coming in 2 years, because you don't really finance for 1 or 2 months or 6 months unless you're an EPC. But these are other well, of course depends, but they can be long duration projects. So maybe let's talk about the team first. How do you see, or how do you figure who's a good decision maker and who's a strong player?
That's the most difficult one, because when we co-founded Tion, the serial entrepreneur backing us always reminded us that the only thing we can do, or the only thing we can do better than others, is hiring better people. And he always advised us, hire everyone you hire, find someone smarter than you, and doing better in that domain. And I think that's absolutely right, but the only that's where management can make a difference. So ideally, you always, as a manager, I mean, what I learned from the serial entrepreneur backing aspect, then make yourself operational redundant, and find people better than you for every domain of the company. And I think that's still the best advice I've ever got. I've forgotten. But how to kind of institutionalize or industrialize the way of attracting always high talent, good decision makers, and then hiring them. I think attracting them is something which you can, to some degree, standardize, institutionalize. I mean, letting the company look nice is, I guess, the easiest way, and also having some track record on the growth side. But how to then identify and select the right people, I think most importantly, I mean, I learned most from mistakes. So not every hire was a success. And that in the end helps to make better decisions today, hopefully. But it was, I mean, of course, there are measures how to at least try to secure that recruiting always ends up with an amazing candidate. And I think that's not making the decision alone. I mean, letting many people interview, letting the team interview, collect all the opinions, do case studies. I mean, having many who contribute to the decision, and not only qualitatively but also quantitatively, but by doing case studies to make some things, try to make them measurable. So that can still result in a wrong decision. And I think judgment in the end becomes better with every mistake you do, and that definitely applies to recruiting.
Fascinating. And yeah, of course, like hiring, like people say a lot of nice things, when they want to get hired, but then and the things turn out to be something else, and then filtering through that is one of the hardest things. To hire the best people is like definitely one of the hardest things. But you made some interesting points, and in this space, in the infrastructure space, you don't have that kind of, because a lot of the knowledge only comes from experience, right? Like these kind of things are not really taught in school curriculum. Like, okay, this is how battery storage works, or so on. This is how infrastructure works. Like, how does infrastructure work is not really something that's taught. Like software coding, yes, yeah, you can code and you can apply creativity. So I'm wondering, like, you already have a smaller pool of people, or are you looking for people rather with general good skills, like smart people in general who are adaptable, and then you give them some time to improve? Or what's your model?
Yeah, I think knowledge always comes from experience. What you learn at school is tools. And or at uni, I mean, the more you have studied, the better your toolkit. But let's say real knowledge in terms of how to do the job is always what you learn on the job. But I think the more general and the broader your toolkit is, the better you are positioned to solve problems. And in the end, for me, creativity is, I mean, it's not about ideas, it's about being able to solve problems, because it makes a hell of a difference whether you have someone in the team who can identify a problem and can solve a problem. And in most jobs, and I think the only environment where you're really trained to solve problems is the startup, scale-up environment. In banking consulting, where all the smart kids end up, you are more trained to identify and analyze a problem, but to get it sorted out is a very different story. And I think in infrastructure, of course, you have many areas where job experience really matters, where you can't just be smart and get it done. In particular, when you think about construction. So being on the ground and taking care that the constructions works are done properly. That's, I mean, how to learn it, not being on the ground. That's one example. But there are also many positions where it's a lot about your toolkit, applying it, being smart, being social. I mean, we have, even though it's infrastructures, there are many levers where it's a lot about being social. In particular, when it's about securing projects, securing land, getting credit, and all that stuff. It's a lot about being social. So I think you don't have the. I mean, and then there's also, I mean, a certain portion of what we do is electrical engineering and planning. That's a one-on-one application of what you learn at uni. But when it comes, I mean, and then when you think about companies being vertically less integrated, like us, for example, Tion, where it's a lot about really acquiring project, then it's typical investment position. Or where there you have an investment team where you normally spend 1 or 2 or 3 years in a, let's say, whatever finance environment, and then you are well trained in Excel, and that's your toolkit, and then you start working on investment proposals and supporting and making investment decisions. So I think, to cut it short, creativity is also needed in infrastructure, and best described as, I mean, as someone being able to solve problems, I would say.
Yeah, and that's the kind of boring, mundane work, what we call as soft costs, where humans spend a lot of time in tooling, is something that we're automating anyway now, right? You know what we're doing, and well, that's the thing, right? Because then you have all this brain power and creativity. It's being spent on doing all the, we label it like non-productive work, right? I mean, copy pasting information from one sheet to another, but you rather spend that in using your mind's capacity to make the human level of judgment, and apply your creativity to actually find your way out of a situation. And so all of those tasks are going to be automated anyway. And I think spotting that creativity is super important. So that definitely makes sense. So you had a point.
I was just saying, I mean, only because you spend a lot of time on financial modeling doesn't mean you are not creative. But I think
sure.
only those with that special touch will survive.
Yeah.
And I think you're right saying that there's a lot of talent wasted on not productive work, but it just has become not productive over the last 1-2 years. It was mission critical before, to have a, let's say, when it comes to investment decisions, to have a properly set up and run financial model. I think if there are, I mean, companies today still doing the Excel thing with 1 million of analysts certainly have missed it. But the work you described and the change is so fast that I'm sometimes really not, I mean, somewhere between excited but also afraid how fast the change is. Today I was introduced to some AI enabled solution, which I felt like, okay, back in it was done in half a day, and it would have cost weeks. 2 or 3 years ago, that would have cost weeks or even months. And things which take weeks or months normally do not happen because they are eaten up by operational tasks. So that is super amazing. But I do agree. But I think it's a bit unfair to say that it's unproductive work per se, because it just became unproductive over the last 2 years. Yeah.
No, absolutely. And I think there's going to be a reverse problem, right? So imagine if you have, maybe in 2 years, you have new students who are really skipping the basics of a financial model, and they get everything prepared by AI, right? I mean, it's just one case of financial modeling. Okay, you have, for XYZ scenario, you have this, and then boom, you have a full sheet which looks amazing, actually looks amazing, but then when you actually have to go deep inside and think about a creative solution to path, to find, I don't know, to get the investors right, I don't know, IRR or whatever, to get down your cost, then you're kind of stuck because your basics are not that strong, because you haven't spent that amount of time doing the grunt work. So that fight between the basics and productivity speed is interesting, right?
But the question is whether those profiles are needed anymore. So why to be trained for something which is not needed anymore? So I mean, my easy interpretation of why we do in infrastructure all this financial modeling stuff is to bridge reality into KPIs or into numbers, in order to make educated and data-driven decision.
Mm.
And that bridge is built by a million of guys working with Excel. But if the bridge is automated, there is no need for someone to be trained in that area anymore. And as long as the bridge is robust, I do see the risk that in the end we have too many decision makers without judgment. I think that's where you're coming from.
Yeah.
But think about other processes which were automated away in the last 100 years. You also do not challenge the computational accuracy of Excel.
Yeah.
So maybe in the very beginning there was someone sitting
You
next
don't.
to Excel and do the manual math to validate whether the system really works. But at some point, I think it just won't be needed anymore. And then if you are, for example, in the best space, if you are an engineer and the system tells you which configuration or which battery any storage system has. I mean, you insert all the technical and the electrical components, and then it tells you which is economically the most suitable one, which is don't need a financial analyst sitting next to you and telling you this system makes 1 basis point more return and this one, blah, blah, blah. So the system just answers that question. And the financial analyst is just not needed anymore. Maybe less people should study business.
Well, that's the thing, right? I mean, there's the speed at which this is going. But what's interesting is the person. I think, in my opinion, if it's true. I fully agree that you wouldn't need all of these. At least the amount of people you would need is simply going to go down because the rest of the work is going to done by AI. But I think you're going to need, and this is also what I say in my company. I think you don't need as many devs. You don't need, we just need one instead of three back end or front end engineers, for example. Similar concept, because it started with coding automation, right? But then that one person who really understands the code base, who really understands the basics, and when there always comes a time where you've reached the efficiency of code, or you've reached what you can do with a given amount of code, and you need a structural change. So that person's value goes up a lot, who understands the core. So I think by financial modeling, if you want to change a model to maybe factor in something new or different, if you don't really understand how what the implications are of the underlying factors, and if you want to try to build something new, I think the more you go at the base, at the foundation, I think having an understanding of that foundation becomes very important at that time when you actually need a foundational change. And I think the same is happening in the software industry now, just kind of separated from but still linked to AI, right? So the person who knows how to build a large language model is super, super valuable now. The value of the person to write code is not really a lot right now, but like people who actually wrote a lot of code and made a lot of mistake understand, okay, when it comes to a system level, this is the implication. Their value is going. So if I've tried doing this, right? I've built a lot of no code solutions, and I've wipe coded apps, but then I really struggle when it comes to a point like, okay, actually, what's the foundational backend system architecture that I should have? And I'm like, okay, this is. So you start realizing the more the top level gets automated, it's good. But then if you want to really change something on the foundation, then only those people who have that knowledge can actually do it. But I agree with you. The need of that is just going to go down, right?
And I think talking about financial modeling, I mean, it's a lot about mechanics.
Yeah.
But I think what exacerbates the point you just made, from my perspective, is that what we are missing more and more is the ability to read and be super focused on one topic for hours. Because that's in the end what creates knowledge. Having the financial modeling mechanics, yeah, why not? But it's about a lot about scenarios, sensitivities. You could, I mean, read one book about statistics and then, or about whatever finance, and you getting it anyway. And then whether you play around in Excel doing the mechanics yourself, or you have the mechanics, so you can acquire the
Yeah.
intuition or the economic sense of it. But what I sometimes believe we are missing more and more is the ability to spend 1-2 days reading into something to become an expert, because that's valuable knowledge to have.
Yeah.
And if you throw everything in the machine and say, "Hey, tell me what the reports and tell me what the book is about," that's
It,
a bit that's really knowledge limiting.
yeah. And that leads to brain rot, right? I mean, we call it brain rot. I mean, because you're
Okay.
not using using your brain so much, you kind of, it starts to get rotting. I mean, I think, I think this has happened with social media, right? I mean, like, imagine like you used to watch movies, television series, things were slow,
Mhm.
and now you become so impatient because you want immediate gratification in a way. So your patience is at seconds level, right?
Mhm.
If you don't find a good reel, and the more you kind of do this,
Mhm.
and so, well, it's going in a, it somehow always goes into this philosophical, what, AI doomsday kind of scenario. But but I think, yeah, that intuition, that knowledge is really needed, and you got to practice and keep honing your skills. I think for any organization
Yeah.
is very important to not, and this is what I tell my engineers. Sasha also does the same. Is, if you have, if you try to build a new architecture or a new set of code, or a new model, in that sense, do not just ask Claude and then try to figure the solution
Mhm.
first, spend 10-15 minutes, and then ask Claude, and then see where Claude was better and where you were better, and then kind of learn from it, instead of just
Mhm.
going down. I think that that's a lot of difference. But this somehow brings me to, because we're talking about financial modeling, financing infrastructure is not straightforward. You mentioned social skills. It's important for
Mhm.
land permits and making good deals, but it's extremely important for capital raising, right? You need to
Mhm.
be close to your investor. You need to be out there. But
Mhm.
it's never really the case of, um, you know, um, it's not as simple. Okay, I wouldn't compare, but financing infrastructure is hard, right? And it has so many stages. You started one stage, and the cycle time is also not something. It's not weeks usually. It's not even days time. It's months, sometimes years.
Mhm.
um in Maybe we start with Europe, because that's, I think, where you're more experienced in. What are the biggest challenges for financing infrastructure right now? Maybe we can put this in terms of capital brackets, like allocation. Actually, is it like sub 20 million, or if it's beyond 100 million, or billion plus? I think the big projects have really good relations with the banks, and so it's pretty easy there. But then when we come to mid market and lower, things start becoming really challenging. um, I mean, I leave that to you, but I think you've seen
Mhm.
this much more. What's your opinion?
Mhm. I think one thing to understand in infrastructure is super important, because it's quite often said that size is beautiful because it facilitates so many things. Also, financing. The bigger you are, the bigger the project, the easier the financing. But I think it's a bit I mean, it's definitely true, but in economics we always distinguish between causation and correlation. And what is also quite often associated with size, which is a bit neglected in saying it's all about size, is that those who have size have track record, and that's also super important. So I think what you find when you look into smaller projects, you quite often have market participants with less track record, and then also with, of course, less size, which attracts,
Yeah,
which makes it more difficult to attract every institutional pocket. But I think both matters in the end. So it's not only about big
the
projects
size.
are
Yeah, yeah.
easier to get funded, but once you have reached that level, you also have demonstrated execution capabilities. I think what is currently, I mean, in my very little Germany battery energy storage system world, super difficult is actually the regulation, because it's a bit an unsteady and uncertain environment at the moment. So that makes attracting capital always, I mean, both equity and debt, super difficult. And on the, let's say in general, when it comes to project finance, which is the main source of getting projects financed, obviously, I think the main challenge is that there are too many moving parts, and that and that the models are very sensitive to little things. So that's a bit the thing, that quite often the project, when it becomes needed to start your banking process, to reach out to banks, the project is quite often not yet where you want it to have. In particular, when, I mean, smaller projects can only happen when you have funding, or when you secure project finance. If you are super large and super equity heavy, of course, I mean, getting project finance secured is not life changing, but for smaller projects it is. And then the main challenge is that there are not too many banks funding projects. Let's say below maybe something 30, 40 or 30, 40, 50 million of debt. And then so it's super important to get the funding done, or to get the project finance in place. So you're a bit tempted to approach the bank prematurely. Then you have too many moving parts, and then, I mean, you quite often have a banking model, which is also, or you have an investor model, a banking model, and it's a bit what you said, moving one Excel to another. It's also very prone to mistakes, and to minor, mistakes because there are too many keeping it updated, and the bank has its own model. And so what sometimes I feel is missing is a bit what you guys are working on, a single source of truth, which works for very robust and educated decision, and which is not too prone to individual mistakes such as Excel. So that's because then you quite often you change something in one model, then how to reconcile it in the banking model, and that's a bit, the level of inefficiency, I believe, is higher with smaller projects than with larger projects. Plus, there are less pockets for smaller projects.
Yeah. No, I fully agree. And I think, from the first point, the track record is super important, right? Because I think it all boils down to risk in the eyes of the investor, right? If you have a track record, if you're delivering, then you're like, okay, then it's easy. And I mean, maybe it's going to take too long to go into the changing regulation to CFD, and how banks are going to be finding this to be a high risk asset class anyway, and the importance of private capital in this space. But I think in general, would you consider country-wise within Europe, it's the same challenge, or would you say Germany is great, or Germany has much bigger scope of improvement, like to make capital move faster in the space?
I think the German banking environment is because you have smaller banks with a local mandate, that definitely helps. They are not yet that active in the BESS space, but they are active in the renewable space. But difficult to compare it to. With Tion, we were active in a couple of countries, so I think Spain, Italy has a very comparable provision of capital. So it's also good. Poland in the very beginning was a bit different, but has definitely caught up. It's difficult to make a cross-country comparison because,
fair enough.
At the moment, the company is solely German. Back in the days, with Tion, we were active in more countries. So yeah, I can best opine on the German.
No, that's totally fine. So let's talk about Germany in general. So you have these banks, right? Some like local mandates really help. You sometimes you have these special purpose banks as well, which are doing just infrastructure and renewables. What do you find them? Do you find it easier to access financing from them or a private allocator? Like it could be a credit fund.
That's a good question, but in that in the smaller, somewhere between or around small to medium sized project, there is no private credit allocation.
Yeah, that's a gap, right?
Yeah, definitely. So I once did with Theon. We once did a private debt financing with a private debt fund. That was certainly a quite fast and efficient process. That's their value proposition to outperform banks when it comes to speed and pragmatism.
Yeah.
But that was a holdco financing, so happened above the projects or the project level. So at project level, there's, from my perspective, there's no private credit or whatever allocation into smaller projects.
Yeah, exactly. I mean, that's there's a huge demand for this also. But then again, that's where we start coming in, right? I mean, like there's a huge demand, right? But then there's this big gap. But then they need to have some kind of speedy mechanism to help them understand the space, the governance behind it, the risk behind it, to help them do the due diligence and underwriting. And that's where we start coming. And the lack of liquidity, right? I mean, you of course know about tokenization. So all of these elements, I think there's a huge potential. But then they start asking for higher yields. That's where things start becoming tricky, which is what banks would not usually go for. They usually offer you better rates, but then tenure has to be higher. So there's some things that need to be. I had a very good conversation about this with Michael Groman.
Yeah.
I mean, of course, so he was the reason why we got connected in the first place. He's in the space as well. But okay, fair enough. You mentioned W Power Storage is right now a scale up in terms of financing. Who do you see? I mean, are you always in the state of looking for finance, or is it more project to project based? How does that work? Project to project.
I mean, our funding to achieve our next, let's say, step in terms of growth is secured by ICG.
Yes.
Which came in as a financial investor end of last year. And then in order to lever the equity which is provided by ICG, we need project by project debt. And hopefully at some point maybe also one layer above and via some holdco debt. But it's project by project. So we need to get project by project debt done. So that's
and so what's the model at W Power right now? Is this is it project finance, and then what do you do with the asset? Do you sell it? Do you operate it yourself?
No, we operate it.
You operate it, right? Yeah.
We develop, build to operate.
Yeah. Okay. That's good, because I think then you have more control, and then you can kind of engineer a few things after that as well. Fair enough. Okay, makes sense. Slightly different question. I think what I had in mind was also more on the team players. But maybe let's finish the W Power, because it's super interesting what you're doing there. Where do you see this going forward? Do you want to be BESS only? It's like, of course, the name suggests power storage, or you're like, okay, there's more. Maybe you can do move to PV or whatever.
No, it's a nothing but BESS business model. And BESS also only at utility scale. So I mean, utility scale is not. I mean, it's not a written in stone definition, but we don't do smaller projects, and we don't do projects co-located to PV or wind, but standalone BESS installations at a certain size.
Interesting. And isn't it the case that it's because from what we've seen so far, it's a little bit de-risked when it's co-located. But then,
Yeah,
okay.
but it's I mean the most fundamental relationship between risk and return is
Yeah, true. Yeah, yeah,
that it's a bit more de-risked, but
yeah.
I think the
The
return you
returns are
sacrifice
limited. Yeah, yeah.
doesn't stack up.
That's true. That's true. I mean, like standalone, if you kind of connect to the grid and do some kind of frequency, I don't know, FCR, and then some kind of connect directly to the grid and provide some balancing, it's yeah, the returns can be actually pretty insane. I think very few people realize the returns for BESS can actually be pretty wild. There's no
Yeah,
way
that's
PV can't really come to it, right? But that's
that's
occasional.
true.
But
That's true. It's much
that's
more, but
occasional
it's
dynamic.
it yeah. I mean, think about the risk. PV is, I mean, in the end, it's a government bond
Mm.
plus meteorological conditions. So if the sun shines, it outperforms
Yeah,
a government
yeah,
bond,
yeah,
and
yeah,
if not, it doesn't because it's backed by a feed-in tariff. Whilst BESS is, in the end, you get a certain share of the market volatility. Um, you have you have a revenue stake, which is nothing but uncertain. One could say so. It's more a trading business.
yeah, yeah.
Even
True,
though we do
true,
not trade
true.
ourselves, but we apply algorithms to the market, try to trade 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 the spread between low and high. Of course, there are frequency response markets, um, but just requires a higher return, even though it's infrastructure. But in terms of revenue recognition, it's more kind of, you have commodity price exposure. So if the gas price is a bit higher, if there's a little less sun, that all it determines how much revenue you recognize with a BESS system.
Hmm.
So I think the returns are not insane. They are appropriate given the risk you take with such an installation.
Fair enough. I mean, returns are insane in terms of PV. Like if you compare
Yeah,
it to
yeah.
PV, that's. But yeah, true. Fully agree. We do have a few questions.
Oh, okay.
I think I know who this is, Francesco. So when you move from banking into actually building projects, what started to look different to you?
I mean, the main difference, moving from a banking role into an entrepreneurial role is that from one day to the other, you're accountable. So accountability is so different. Um, and I think that's the major difference. I mean, of course, it's a different domain, and it's something different whether you work on whatever in banking, or you build a PV park and operate it, or what.
Hmm.
But I think the main difference is responsibility and accountability, because that's very binary. So either you own it or you don't own it, or either you act like an owner or you don't. And I mean, if you are responsible and accountable for everything, that's quite a change.
Interesting. And of course, the free snacks and the security of things immediately go away, right?
Man,
If you move from
man,
some place like JP
and
Morgan to
you're not only responsible and accountable in case of success, also if things go bust, you're the biggest loser in the room. So
yeah. Well, I mean, that's the thrill, right? So, and then there's another one. Has anything quietly shifted in how you see projects over time? It's rarely one moment, more something that changes gradually. It's a difficult question to understand for me.
yeah,
Projects, you mean battery storage
I
project?
mean,
Okay, but I mean,
with the more experience I've acquired over time, the more relaxed I look into projects when issues surface.
mm,
That's maybe an attempt to answer it.
well, okay. So yeah, I don't know. I think it's Francesco, right? So I don't know what kind of projects you mean, but maybe it's related to this one. There was one point that also had written down is: do you think building something from scratch is easier or scaling it? Now, please don't give a diplomatic answer. It depends. But like in terms of challenge, um,
mean, being brutally honest, I think for me personally, scaling it is easier.
Yeah.
For you, building from scratch might be easier. So
No.
and it's not about. I mean, it's a mix of, does it suit your skill set, and most importantly, do you enjoy it? You know, if you don't enjoy it, you won't do well anyway. So if you only build something from scratch because all your friends do, you won't succeed.
Oh, no.
So it's not about what is easier. I think the most easiest thing to do in life is do something you enjoy, and then
True.
that increases the probability of success most compared to anything else, because I mean, having a high level of enthusiasm, enjoying standing up every morning doing your work. I mean, that's so powerful. Nothing can compete with that anyway. So if you enjoy, if you love nothing more but ideation, build it, sell it, and build something else. If you like scaling it, if you enjoy this, come in a little later and have your contribution. So it depends on the person, not on the two different, let's say, stages in the life cycle of a company.
Makes sense. That's powerful. This reminds me of a saying in my language. It translated to English is like, do the work which feels like fruit rather than rather than trying to do the work and then hope you'll get the fruit one day.
No.
Like it's like a raw. It doesn't capture the right emotion in when I translate. But I think you get the point. And I think it's also a skill set in a way. I think some people, like, I think I am more personally talented in uh, building context is one of my greatest skills. I'm more talented in starting something and then leaving it into hands of an amazing operator. So when it comes to scaling things, I feel I think it's also quite talent. Some are really good at, like, okay, give me something which is already there, I'm going to make it big. But he or she won't be the best person to actually start something new and kind of conceive that, okay, find that opportunity. I think it's also something, and if you realize that, I think then you kind of start becoming happier in life, because then you're doing what you actually enjoy. What there's one more question before I say, in a distributed energy, let me show it, where the constraints is reliable cash flow. How do you see AI helping standardize thousands of small assets? That DER is also an interesting topic. I don't know if you delve into that too much, but I think at some point you would.
I mean, if the definition of decentralized or distributed energy is, let's say, or it starts actually with those rooftop and super and residential real estate installations. So I'm not an expert in that, but I believe that that on the planning side, AI, at least to my best knowledge, is super powerful. That you basically Google Earth plus some other information gives you a kind of understanding of the building, and then planning is almost happening, taking into account irradiation and stuff like this. And then the planning tells you, hey, you should install XYZ here with the on the following, let's say, left hand, right hand side of the building or the roof or whatever. So I think on the planning side, there is a lot which can be automated, because there's no magic in planning a PV installation. And then I think, I'm not an expert on it, but I think on this virtual aggregation, virtual power plants, where you aggregate a lot of distributed energy into one, it's about data, and I also believe that AI should make a difference when it comes to capitalizing on those data you have.
Yeah, correct. I mean, like, Exactly. I think that's where Festus is getting into as well. That, this whenever there's a lot of data and a lot of decisions have to be made, and it becomes crazy for humans to kind of deal with it and predict. So I think prediction is something where this has a lot of. It's not a new thing. It has been done with machine learning before as well, but I think with AI, it's just far more powerful now. And then if you can predict where there's going to be a gap of supply, and and then you kind of prepare the resources accordingly, I think these things are where AI can massively help. One final question: what keeps you awake at night?
Our wedding will happen in September this year. There's still some planning to be done. I think that,
I knew this is going to come. I knew it. Okay, fair enough.
So that's the only thing which keeps me awake at night. But when I was younger, sometimes also business kept me awake at night. But fortunately, I'm done with that, and no, I think the only thing which keeps me awake at night is some excitement in private life. Business doesn't keep me awake at night anymore.
That's that's the best thing, right? I mean, did you find the band finally? Did you secure it?
Sorry?
The band. You were looking for the band, and
That
is
was
that?
I did the call before I joined the
Okay,
podcast.
that's why. Okay. Well, I hope that you figure that out soon, and you don't leave so much sleep behind. But hey, Martin, as always, I think I could go easily, another couple of hours, like we usually do. But I think we then have a lot of material to talk for the next one, whenever we do it. But thankfully for the time, really appreciate it, and I'm looking forward to see you again soon. Um, but yeah, thanks. I think the audience is always happy to, and they were appreciating, right? I mean, in the chat you don't really see all the chats, but they're like insane insights and insane experience.
Okay, glad
So
to hear.
it's always appreciated. And yeah, thanks for joining again, and really happy to have you on board as as an advisor, and look forward to do big things.
Yeah, likewise, and I pretty much enjoy being part of your journey. And it always, I tend to say that being exposed to you keeps me state of the art when it comes to technology. So I learned a lot from you as well.
Wonderful, very 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 nice of you to say that. Great. I'll end the stream, and then yeah, catch up soon. All right.
Sure.
Perfect.
Thanks.
Thanks.